I'm good. Hold on. I got tape on my camera.
No doubt. Take your time.
I'm on mute too. I'm also eating.
No doubt. Hold on. Let me get my headphones real quick. They in the car, but it's cool. I'm gonna still rock out. Yeah, can you guys hear me fine? Put a chat up on the side, so.
Okay, yeah, I see you. True mathematics up in here. No doubt. Okay, you got your phone on mute or your mic on mute.
All right, yep. All right, cool. Let me know when you guys are ready.
Yeah, I'm with it. I got my pen and paper already.
Y'all ready? All right, cool, man. So this is being recorded, so if anybody doesn't see it, we could just send them the recording. I'll leave the recording in the channel. 1 second. All right, so basically, man, I just wanted to start off with, we'll do this meeting for an hour, and I just wanted to start off with the psychology of trading first. Since we're starting with the basics, it's always important to start with the psychology because, this game is 90% mental, 10% technical. 10% is really just pushing the button by yourself. But if you don't have a good basis or a good analysis or even know what you're doing, you can definitely screw up, right? So I just wanted to let everybody know that, trading is not a get-rich-quick scheme, right? I want to start off with that. So we'll spend the first half talking about psychology, and then the second half I'll share my screen. Let me see if I can. I'll share my screen, and then we'll go over some technicals on trading view. So trading is not a get-rich-quick scheme, right? So it basically starts out like a lot of people are on Facebook or they're talking to somebody and they get, they fall in love with the allure of the market because of the profits you can make. People see screenshots. They go on Facebook and they see other people posting screenshots and things like that. So they get so wrapped up in the fact that you can make money, from the markets that they just think it's you can get rich tomorrow. When it's not the case, right? There are a lot of people who trade Forex for a living, and these people do it full time. So, in order to get to that point, it took a certain level of commitment, right? This is not like a get rich quick scheme. Like I said, you will not get rich next week or next year, next month, right? You're going to be trading for a while. But the thing about trading is that it's an endeavor that's worthwhile. So, like I said, the problem is people think you can make, thousands and 10,000s in a week, which is possible, but you have to have the skill. If you get in, like I'll give you a live story. When I came in to Forex and I was trading, I was making money, but I was following someone else's system. When I wasn't attached to that system anymore, and it came down for me to trade, by myself and, look at the charts and mark the charts up by myself, I didn't know what I was doing. So the reality of it is that Forex is a skill. So you need to spend the time to develop that skill, right? You won't get rich overnight, but through the course of time, you will build your account and then you will have enough money to leverage, to trade with, to make a sustainable income, right? So it's all about the psychology of it. It's all about the psychology of it. How you're looking at the markets, right? Understanding that it's not a get-rich-quick scheme. So that's the first point that I want to start out with. Like, have the proper expectations when you're trading, right? So the second thing that I wanted to get into in terms of psychology is having a trading journal, right? When I started trading, I was trading for I've been trading for 2 years now. I was trading, honestly, for about a year with no trading journal, right? So I want to give you an analogy. When you're trading, God bless you. When you're trading Forex, right? I'll give you an analogy and make it similar to sports, right? Something easy we can all think about. Let's take basketball, for example, right? I'm sure everybody here has all watched basketball before. When you watch basketball, they keep track of the score, right? They keep track of everything, all the statistics, how many fouls, how many inbounds, how many shots were taken. They keep track. Same thing with football, same thing with soccer, same thing with any sport, right? Any spectrum you can think of, people are keeping track. So that's why it's very important to talk about, a trading journal, because I know a lot of people that do not have a trading journal. So I just want to show you guys. I keep my trading journal with me all the time, right? Because it's very important. Let's say if I want to look over trades, or let's say if I want to see where I messed up, right? I document everything in here. My wins, my losses, what I wanted to do, what I didn't do. That's all very important. So like I said, the purpose of having a trading journal is so you can keep track, so you can keep score and know what you're doing, right? That's very, very important. A trading journal will help you see where you are in the market, see where you have been. It's historic data, right? Because, it's all about collecting the data. So it will help you avoid future trading failures. So, let's say like in let's say, you go to take a trade and you go to sell, right? And it actually was a buy. So, it hit your stop loss, it closed you out. You want to make sure you're writing that down so you can know, okay, I bought too soon. I feel like I bought too soon. Okay, maybe I sold too late. Things like that. If you don't have it written down, I did terrible my first year in trading because I was just going off of pure thoughts. I wasn't writing anything down. I wasn't getting any type of documentation. So, I was losing a lot of money, right? I was one of the people. I was talking to somebody the other day. I got him started with Forex, and he loves the allure of Forex to the point where he's like, "Yo, I'm about to deposit money." It was about his first week, and I'm like, "Don't do that, bro. You don't want to do that. Trade demo first. Trade demo until you have the confidence and until your strategy is working." He hadn't even developed a trading strategy yet, and he was talking about putting money into the markets. So that just goes back to, it's not a get-rich-quick scheme, right? It's not a get-rich-quick scheme. Trading takes time, but it's worthwhile. So second, have a trading journal. Get a notebook. It doesn't matter how big, how small. Anywhere where you can strictly write in there about Forex. That's very important when we're starting out trading Forex, right? So if you don't have that, make sure you get a journal, right? And then within the journal, right, there should be two concepts that you're writing down in this journal. The first one is fundamental, right? And the second one is technical. So I'll give you an example of the fundamental. If I'm going to trade, right, in my trading journal, if I'm writing fundamental information down, I'm going to say something like, I believe the dollar will continue to weaken, based off of such and such and such. That's a fundamental analysis. That's just what I think, right? A technical analysis is looking at the chart and seeing like, okay, the dollar has retraced back to a point of resistance. So that's something that's technical compared to something that's fundamental. Now, you have two things to compare against. That's why it's very important to have a trade. Everybody can hear me good?
Yep.
Cool.
Yep.
All right. So the last part of psychology that I wanted to touch on, right, is just gaining awareness daily, and then we'll go into the technical and look at some charts real quick. So gaining awareness daily. I remember when I first started trading Forex, I would like I said, I was trading off of somebody else's system. I hadn't taken the time to develop my own system, get to know myself better, and figure out what my trading style was. So I would just be what I want to talk about when I talk about gain awareness daily is two types of practices when it comes to Forex, right? The first type of practice is simple practice, and the second type of practice is deliberate practice. And I'll break those two down, right? So when I first started trading Forex, I was simply practicing. So when I say that, what do I mean? Simply practicing would mean like, okay, how I got introduced to Forex, my friend, I used to do a network marketing company called Wake Up Now. That company fell, and I was, in love with the fact of not having a job and working for myself and things like that. So it just so happened that my friend called me up from that company talking about Forex. So, you know, he basically brought it to my attention, and I did some research on YouTube, and I seen people making money. So I'm like, oh my gosh, I'm going to be rich. I'm going to be a millionaire next month. So, you know, I didn't have any, like, you know, sound structure on how the Forex market actually worked. So I was simply practicing because I would just go on Facebook. I would look at other people posting their results. You know, and the crazy thing is some people post demo results. They don't even post real results. So you got to be careful, right? I was simply practicing. I wasn't deliberately practicing. I was looking at other people, looking at other people's results. I would get on the charts, and then I would go on Facebook. I would go on Twitter. It's too many distractions, right? So, right, demo traders act like live traders. So, you know, it's all in the lore. So when I started to understand how Forex really worked, and that it was really, really a game of the mind, a game of self-mastery, you have to know yourself in order to know the markets, right? Because however you are inside is how you will see the markets. So when I started deliberately practicing, I started looking at the charts, and I would get on the charts. I would have my notebook in front of me, my journal in front of me. And what I would do is turn my phone off or put it on airplane mode for however long I was trading for. So if that was for an hour, I would close out all other tabs on my desktop. I would put my phone on airplane mode, and I would focus deliberately. I would try to gain new information daily about Forex. So this is where I used to have trouble, right? Between simple practice and deliberate practice. When I first started trading Forex, I would gain information daily, but I was simply practicing. So what does that mean? I would get on Facebook and I would look at other people's results, trying to apply it to my strategy, and, you know, just taking what a bunch of people said about Forex and then trying to, you know, apply it to my strategy. I was just simply practicing. I wasn't focusing. So when I started to deliberately practice, I shut my phone off. I cut distractions off. And I would learn things about Forex that, you know, I could apply to my strategy or to my plan daily. So gaining awareness, right? So let's say this, right? When I first started trading Forex, it took me about 6 months, maybe 7 months to understand, right? This is how important it is to understand balance, margin, equity, you know, things like that. So hold on, let me show you guys real quick. Give me 2 seconds. All right, so I want to pull something up for you guys, right? I'm going to go to my MetaTrader. I'm going to go to a small account that I'm building right now, right? Testing some strategies on this live account. I want to show you guys. I don't know if you can see it. Balance, equity, margin, free margin, and margin level. I didn't learn what those things were until about 6-7 months into my trading. Now, that's so bad because it's about awareness, right? I'll give you an analogy. Imagine me getting into a car, going to drive the car, and I look down, right, at the gears, but I don't know what the gears mean. I don't think I will get very far, or I will through trial and error, but why waste that time, right? So it's very important to become aware about all aspects of trading. So that ties into deliberate practice. When you deliberately practice, you sit down and you ask yourself what you don't know based off of your journal, right? So if you don't know something about Forex, sit down and write that out in your journal. Write down, I don't know what this is. And then you make that your job to deliberately go and find the accurate information, right? So when I started to do that, my trading revolutionized because I was deliberately practicing. I was deliberately trying to find out things that I didn't know. I was deliberately trying to become aware instead of going with the trend and looking at everybody else on Facebook and just simply practicing and, you know, shouting out, oh my gosh, I'm catching pips, this and that. It's all cool, but, you know, nobody really cares, right? Nobody really cares. Nobody really cares. It's all about you. So you have to deliberately practice when you go to trade Forex. Now, you know, just to recap, what we just talked about. We just talked about psychology. You know, the basis of Forex is psychology. So the first thing we talked about is Forex is not a get-rich-quick scheme. Make sure you have the proper expectations for trading Forex, right? The second thing is have a trading journal. It's very important to have a trading journal so you can write down your history of your trades, the history of your thoughts when it comes to Forex, and just so you can have statistical proof and, you know, stats that you can look at that you can use to get your trading better into the next level. And then last but not least, gain new information daily, but make sure you deliberately practice. So don't just simply practice Forex. Don't just look at your charts and, you know, say, oh, I think it's going to do this, and that. Find out why. Find out, what a support and resistance truly is. What I found out through trading is that 99.9% of the books that people buy on Forex, they might go to the store. Like I was at Barnes & Noble the other day, and I seen how to trade Forex for dummies. So, you know, through my course of learning, the market makers, the big players in the markets, like I'll show you guys when we go do technical analysis in a few minutes. The big players in the markets know all the information that's in the books, right? So they're going to use that against you, right? So really understanding what support and resistance is, really understanding who's in the Forex market, who's trading in the Forex market. That's very important. So I can't stress it enough. Psychology. Make sure your psychology is right when trading Forex. It doesn't matter if you're a good person or a bad person. If you go to the charts, however you are on the inside is how you will look at the charts. So if you guys have your pen and papers down, I'll also write it in the chat real quick. It's a word. There's a word called equanimity. And that's what you need to have when you go to look at your charts, right? So I'll give you an example. When I used to go to look at my charts in my head, this is what my internal dialogue would sound like. All right, this is how it would sound. All right, what the heck is this? All right, I see some green candles. I see some red candles. It looks like it's about to go up. You don't want to have, that's called the monkey mind. You don't want to have all those thoughts when you're trading. You want to be sound, clear, and know what you're already going to do, right? So we'll touch more into psychology. You know, we'll always touch more into psychology, but right now what I want to do is I want to look at some charts with you guys for a few minutes just to show you, like, you know, how I analyze the market and what I look at, what I see, just to help you guys become more profitable traders. All right, let me see. All right, I'm going to share my screen. Let me pull up a separate window real quick, guys. Give me a second. All right, perfect. All right, boom, here we go. Share screen. All right, let me know if you guys can see this clearly.
Yep.
All right, what I'm going to do, everybody can see clear?
I can see.
Yeah, I see it clearly.
Sweet. All right, what I'm going to do is, as you can see, this is the Euro USD on the dollar. What I'm going to do is just clear all of this out so you guys can see how I start from the beginning, right? Remove all drawings. Now, I mean, I'll give you guys a brief explanation on why I have, like, even being aware of the moving averages, right? I'm not going to sit here and explain exactly what the moving averages mean. That's, you know, you can spend some time doing that, but I'll just give you a brief explanation. The moving averages show the average of the closes, right, of the candles. So if you can see, like, let's start from here, right? The average of these candles, if you take the total of these candles right here, add them up and got the, added them up and then divided them by however many candles there were, you would get the average. So if you can see the average, it looks like it's going down. This moving average it looks like it's going down because it's going down. So you can do some research on moving averages, after we get off of the call and get, just to become more aware. You want to make sure you are aware of everything you are doing with your trading strategy. So when I first come into the markets, what I do is, like, if I hadn't looked at this chart at all, my thing is when I look at the charts, I mark them up on either Saturday or Sunday, right? Or let's say Friday, Saturday, because the market closes at 5. And then, 1 second. Perfect. So the market closes at 5 and then it doesn't open until Sunday. So basically, right? I come and I start on a monthly time frame, right? The higher the time frame, the stronger the trend is. So start on the monthly time frame and I just look and see, what's going on. I can see it's been going down. It went down in 2000. It's been rising 2004. Had a little dip in 2006. Rose all the way up in 2008, right? And then since 2008, I'm going to mark this right here. If you can see, since 2008, each one of these candles correspond with this time frame, 1 month. So each one of these candles is 1 month, 1 month. So this is 1, 2, 3, 4, 5 months, almost 6 months, right? 6 months right here. I want to show you something.
So each candlestick month. All right.
Yep. Each candlestick corresponds with your time frame. So let's say I'll give you a direct example. I just selected the 4-hour time frame. Each one of these candles would then be 4 hours, right? 4 hours, 4 hours, 4 hours, 4 hours. If I went to the 15-minute time frame, each one of these candles would be 15 minutes. And I'll show you an example, right? So let me see. The market has been open since 5 o'clock, 5, 6, 7, 8. This is the 9th hour candle, right? So, okay, let me see. 9 divided by 15. 15 divided by 9.
2 points. 1 point.
Oh, my bad. 1, 2, 3, 4, 5. Yep. So 60 minutes, 15 times 4 is 60. You have 4, 8, 12, 16, 20, right? So you see 1, 2, 3, 4, 5 candles divided by, it's 4 15-minute candles in each hour. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. So each candle corresponds with the time frame that it's on, right? So let me go back to the monthly.
And you can use this time frame to get a more accurate view of what the trend is doing?
Absolutely. So I'll answer your question with a live example. So let's say if I was to look at the 1 month chart and take a trade on the 1 month chart, for me, that would be a long-term trade, right? Because each one of these candles would be 1 month. So that would be a long-term trade for me, right? So when I use the 1 month, I use it as an analysis chart. So when I'm on 1 month, what I do is, okay, I seen here in 2008, it came up here, right? It came up here. It hit it here, came down, did a retest right here, and then dropped. And then the market has been dropping ever since 2008. It's been fluctuating, but it's been dropping more since 2008. So the reason why I drew this line at this price of $1.60, 234, is because this is a strong resistance. The price came up here twice, tested it, but did not break through, right? Let me show you something.
So is that the highest it was at?
Yes. Yep.
Let me write this down.
Yep. $1.
So this is a trend. Would this be considered a trend if it's like at the same spot again?
No, this would just be considered a retest, right?
Okay.
So it came up here and it hit right here. If you can see, I'm going to go straight down. For April 1st, 2008, it came up to the price of $1.60, right? We'll just say $1.60, 234. It dropped down to $1.56 the next month. The month after that, because remind you, on the monthly chart, you always want to stay aware of what time frame you're on so you can know what candles you're looking at. So this is a month. The next month, for 2 months it was dropping. The following month it went up, right? And this wick right here, I'll explain the wicks to you guys, right? Just so you can understand this. The wick is where the price attempted to go. So if you can just use your imagination for a second, right? Looking at this green candle, matter of fact, even looking at this red candle, we'll use both of them as the example so you can get it, because the wicks work in either direction, right? This candle, see the bottom of this candle? This is where the candle closes, right? This is where it opens. So where this candle closes, this candle opens the same exact area, unless we have a gap. And I'll show you what a gap looks like. But for right now, I'm going to teach you what the wicks look like. So it closed here at this price of $1.40, 727, right? The next candle opened up at the same price point. But then during the month, the candle came down here. So at one point, this whole thing right here, where this wick was red. So you can see this wick. This, before it turned into a skinny line, was at one point red. The reason why it's a skinny line now is because there was not enough selling pressure for the price to stay down here. So when the price came down here, there were people that believed in the market that, the price was going to rise. So they started to buy. So that took the price back up to here, but there was not enough buying power to make the price go up. Now, this candle would have been green if the price, you see the price opened up here. If the price would have went above it, the candle would have been green. So you can see here, this candle is red because it closed at a lower price than the previous candle. This candle right here is green because it closed at a higher price than this previous candle. So back to the wicks. Wicks, I'm going to write it down too so you can see it. Right? And we're still on the monthly. I just want you to understand the wicks because it'll play a big part when I go into the smaller time frames. This wick means that this candle bar opened up here at this price of $1.26, right? It started to rise. The buying pressure was going up during the month because this is a monthly chart and these are monthly candles. The price was rising during the month. During the month, it came all the way up to $1.47, right? But there was not enough buying pressure to keep the candle here. So this is a
scale of.
Yeah, exactly. So this is an attempt at where the price could have been, but this is where the price closed at. So I want to show you that. I showed you the wicks to go back to this, right? This candle right here, it went up, it threw a wick. It was going up, right? And it threw a wick, but it closed at a lower price, so it's red. Now, if you can see, what did it do again? It came back here and it retested the same. Look at how the market, like literally, it doesn't go. I mean, it could have thrown a wick a little bit above it, but look at how perfectly this candle aligns with this one, where they stop at. So to me, that would be a strong point. That's like a ceiling, right? That's a strong, the price doesn't want to go through it, right? That's a ceiling. Let me just mark that. Change the color so you guys can really see it. Make this green. It's a ceiling. The price doesn't want to go through this, right? The price isn't going through this. So that would be a ceiling. That's a very, very strong point of resistance. So, okay. I might have to start another. Oh no, we got 10 minutes. Yeah, we got 10 minutes. All right, so let me break it down. After I do that analysis where I see, where a strong point of resistance is, I usually will mark my support. So the price came all the way down here, right?
Mm-hmm.
At 82 cents, 250, right? That was the lowest point on this chart. That's the lowest point that the price went on this chart. So, I marked that down just to have it as a reference, right? Then what I do, the last thing I do on the monthly chart is I go to what is relevant in the market right now. So 2015, 2016, 2017, right? What I would do is mark the price where the lowest 2 wicks are. So you can see it's here. The price wanted to go down and break it, but it didn't, right? And then it started going down again to retest it to see if it wanted to break through, right? But it didn't. It started to go up, right? So after I do that, what I do is I come to my next lowest chart, next low time frame, which is the weekly after the monthly, right? And I just look to see where there is a level of resistance. Where is there a level that the price is not passing, right? And I mark that down. So this is the highest point. It threw a wick up here, but it didn't break it, right? So now I have created a zone for myself on the weekly chart. I have a zone. The price is playing in between $1.17 and $1.03, right? So I have myself a zone. Any questions?
So you mark the highest point and the lowest?
Yes, based off of the wicks. I'll get it. These are my first strongest support and resistance. I'm marking them on the wicks because they are the wick shows where the price wanted to go, but it did not go there. It shows where the price attempted to go, but it did not go there. So let's say I would have sold here, right? The wick came up. Let's say if I would have put my stop loss somewhere way high here, right? The wick would have came up and taken my stop loss out. That's what the wicks are for. They are used by the market makers to take out stop losses, gain money. What are we trading Forex for? It's all about the money, right? So people are trying to, the market makers, the big players, the banks, the institutions, the people who are trading millions of dollars, they are the ones who, you see this weekly? They are the ones who create these big candles. These big candles, they are not retail traders. They are banks, institutions, hedge funds. I pulled it up the other day. Hold on, let me look at my notes. The top 10 trading banks in the world right now are Citibank with 12% of the market, JP Morgan with 88% of the market, USBS, which is 8.8% of the market, Bank of America 6.4% of the 6.4% of the market. That's just to give you an idea of who you're trading against, right? So they will throw wicks like this to knock out your position and take your money. So you just want to mark out your zones according to the wicks first off, right? So after I do that, I like to keep it simple. When I first started trading, I would come in and I would do this. After I mark my 2 lines, I would come in and I would do this. I would mark another wick here. Then I would come in and I would mark another wick here. I would come in. That's cool to do, but I like to keep it simple. And since I don't trade on the weekly, I just use it as a reference, right? So then after I mark my zone, I come down to the next time frame, the next lowest time frame. Now, this is where I do my true analysis, the daily and the 4-hour, right? Because they will give me a true sense of the trend. Now, when I look at the daily, what I want to do is, again, I look for wicks. I look for the very, very strong wicks, right? So you can see this one right here is very obvious. It's a long, strong wick, right? So what I'm going to do is mark it down. This is the price point, $1.12, 908, right? This is where I would add more support and resistance lines. So we got 5 minutes left, so I'm going to try to do this as quick as possible to show you guys how I place a trade based off of my trading strategy. So I'm just marking the charts up to show the significant points, right? So support and resistance is very simple, right? I want to give you guys the exact definition, right? The concept of support and resistance basically forms your Forex analysis, right? Your technical analysis. When you are looking at support and resistance, this is it, right? I'll give you the most simplest definition. It is the points in the market where the price significantly turns, right? It is the point in the market where the price significantly turns. So the price came up here and it did not break through this. What did it do? It turned around and came back down, right? The price came up here once, came down twice, touched this point right here, this price of $1.14, It touched it once, touched it twice over the course of a few months because these are daily candles because we are on the daily chart, right? And then it dropped. So this is a point in the market that's a significant point because it came up here, and then turned around. So that's all support and resistance is, where the market turns around. So like, if you guys can remember when I said something about a gap, right? Let me pull up my time scales. Session breaks. Can I pull up session breaks on here? Should be able to. Give me 1 second. All right, for some reason, not letting me pull up session breaks. Maybe if I go to the 4 hour. So let me finish out. Once I'm done on the daily, marking my strong points of, where the market turns around, what I do is I come down to the 4 hour chart. Now, you may want to write this down because this is something that I learned a year and a half into my Forex trading journey. You want to look at the market from a higher time frame, but place your trades on a lower time frame. So what do I mean? I look at the charts from the daily. When I first come on, I look at the daily and the 4 hour, When I look at the 4 hour, what I do is I just draw trend lines, right? Starting from the lowest point. So it was here. It went here, right? 1, 2, 3. 1, 2, and it didn't touch here. But you can see, right, if I continue this trend line, this breaks it. So this trend line would be invalid. That's an invalid trend line. Let me show you a valid trend line, right? Start from the lowest point, which is here. Mark it, and then make sure the bottom or, the top touches it. So we have 1, 2, 3, 4 touches here, right? I think I'm gonna start another because this is about to finish out in a minute. So I think I'm gonna just start another chat to give you guys, to show you guys what I do when I exit or enter and exit the market. So I'm about to stop this chat right now and then start another one, guys. Oh, I'll answer that question. What's the stop loss in a second? Okay. And I'll put another link in the chat in the channel right now so you guys can pick it up.